Peter Campbell here, introducing you to the control indicator and the control oscillator. This is a simple 5-minute S&P chart with control plotted on it. And one of the reasons that I'm showing you this is because I want to show you a few ways to use control. Control is an amazing tool for trading the open, which is traditionally a very difficult thing to trade. Now, we've got a 5-minute chart here. Personally, I like to trade a tick chart, and we'll go to a 733 tick chart here, and we'll go back 8 days, just so we have enough data so I can show you some examples. The great thing about our market nowadays is all it does is gap. So it's easy for me to show you examples of how this works. So here's a chart of the S&P 500 futures opening gap. And one of the things that likes to happen when we gap is that we like to try to hold control. So there's always an attempt to hold control, or there's an attempt to break it. It's the retest that matters. So here we break control, and that gives us an immediate move down. And there's two things to keep in mind. One is that control then becomes a dividing line. Once we lose control, it's reasonable to assume that the market is going to continue in that direction until we break back over control, because then that would be the head fake retest. And this market likes to not only give you a test of control initially, but it likes to give you a retest and just to freak you out, break it, and then start an uptrend. And so that's exactly where we go. As soon as we break control and control turns green, then we have a dividing line in the sand. We can see on the S&P 500, which I think trades lousy. I hate the way the S&P trades. The candles don't look good. There's just, these are not good looking candles. So I'm going to switch into the euro, or I'm going to switch into the TF, which has much better looking candles. And EMD also has much better looking candles for futures. But this works on any stock as well as any future. And basically you see here we break over control over here, and control becomes support, and control stays green, which gives us a confirmation that our trend is going to be biased to the upside. So that's a very powerful element of control. Now, what I'm going to do is I'm going to show you a couple different ways to use this. And so let's go format this control indicator. So we have control, we're using a daily period. And what we're going to do is we're going to show price and turn this into control oscillator. So, and when I do that, I want to display this on another subgraph or subpane. And there we have it. So what's interesting here is that, I gave you ability to have price smoothing in here. This is a very, very fast quality of smoothing. And, maybe it'll give the ability to have multiple types of smoothing, but that's a separate story. The main point is that it's very fast. And what you see here is on this oscillator, our break of control, you see our trend is up for control, and you see that as long as this line is blue, our trend is to the upside on control. So what's interesting on this chart is to look at divergence. And this gives you a very different kind of divergence than what you would normally be looking for, out of a MACD or an RSI. Basically, what we're seeing here is the distance from control, the distance from the trend. And when you get a pretty good divergence, those are usually pretty good trades. And so I'm going to point out a few of these, and this is why this thing is useful. Basically, we're getting a pretty major divergence here, And in order to maybe use this for more divergence calculations, you might want to increase the speed increase the smoothing, let's say to 13 or something like that. And maybe we'll go up even higher, 21. Okay, so basically we can get a very good idea that this is creating divergence. And then we get even more divergence on the next move. And both of those result in pretty good trades. So the divergences here are unlike traditional indicators because it's based on price. The whole situation here is based upon price relative to the control price. The trade, this gives you some clarity of how to trade in the morning when you get these big gaps, which are totally confusing. I mean, I don't know anybody who really would want to buy this gap right here. But at least once you break control and then come back and retest, you know that it's probably going to end up being some sort of a trade there. And here's a intraday example, retest of control, and then pull back, which was pretty good at the end of the year. And again, tradable gap. We open, we're over control, we break it, come back up, retest. So this is the pattern that repeats every day. You retest in one direction or the other, and then that presents the trade. And it happens, pretty much almost every day. So here we are, we're over control, we retest control, we get some sort of a trade, we break it, and we get another trade. It's pretty consistent with these gaps. Same pattern again, we're over control, break it, then come back, retest the oscillator, and come up. One of the things that happens with these gaps is they can be very damaging to your trading if you get them wrong. Here you go, control and control oscillator, good tools to help you get a handle on gap trades and support for the day. This is also the basis for some of the symmetry calculations from the symmetry extensions indicator, which you should check out. So I'll be back soon with another study.